Hello, it's Friday and it's What's Your Story? Welcome. I'm your host, Charlie Timmins, and every week I bring you a guest who's authentic, who's going to offer you genuine, insightful information and practical ideas that you can put to use immediately. And today is no different. I don't know about you, but the amount of media attention, pitches from people that want to get my money and they want to manage my money, we all know it's everywhere. And today we're going to talk about that because we all need to understand the differences. And today I have my guest will be able to explain some of the differences. My guest today is Roy Innella. And Roy is the principal at an organization called the Wealth Advocate Investment Group. What he tries to do is help his clients keep more of what they make. His motto is, it's not how much you make, it's how much you keep. And that interested me. So Roy, tell me how you do this.
Okay, Charlie. Thanks for having me on.
Welcome, my friend.
Thank you. Thank you. I use the phrase integrated tax, business, and financial planning. I do this for business owners as well as high net worth individuals. What we do is we find tax strategies that help them keep more of what they make. And that's essentially it. So our first engagement is usually that of me handing them a check and we say, how are you going to invest that?
What did you just say? You do what?
We hand them a check.
You give them money?
Absolutely.
All right. So you got to give me a story or some kind of a narrative as to how you did that for a client, so the audience understands, because this is different.
Absolutely, Charlie. Well, I can tell you about a case that we had in South Jersey. We had a HVAC contractor who had $1 million building, 75 employees, felt they were overpaying their taxes. We did our analysis. We found $50,250 for them in a cost segregation study, which, without getting into the weeds, it's a form of accelerated depreciation. So that added cash flow to their business. In addition to that, there was a workers' comp audit that we did with their P&C insurance, got them another $12,000. So the owners of that company ended up getting a check for $12,500 before we even talked about any investments.
So this is obviously different than what other of these financial advisors we see on TV.
Absolutely.
Okay. So explain that difference as you see it.
Well, we start by finding assets for the client. And in doing that,
Assets they already have,
these
they
are
lost track of? Or?
Essentially found money. Let's call it found money, in either a form of a tax rebate or in the form of some other incentive program that the government has. There's a plethora of different things out there that we have specialists that after analysis will find opportunities to put money back in their pocket. Once we find those monies, then we'll say to them, hey, what are you going to do with this? And we'll find some tax efficient ways to invest that for them.
Before you launched into this approach, which you've been doing for about how long now?
2 years.
What were you doing right before that?
Well, I was a traditional financial advisor, and we worked with high net worth individuals, but I just didn't like that model.
What do you mean you didn't like it?
Well, I come from a business background. I owned a printing business for 10 years. I was in the printing business for 30 years, and always on the management side, the money side of the business. And nobody had ever come to me with these approaches and said, hey, Roy, I can put money back into your pocket, because we could always use cash flow, right? Every business needs cash flow. So for many of these businesses, it's additional cash flow and also money for the owners, because it all falls to the bottom line. When you're cutting your fixed costs, expenses, the money falls to the bottom line. So in any case, I didn't like the role of a traditional financial advisor. I don't see myself as a salesy type person, and more of a technician. and I enjoy this work much better, and my clients enjoy it too.
I think that would resonate with the audience, because most people, when they hear the term, I'm a financial advisor, they tend to pull away instead of leaning in. But when I heard you first tell me the story about how you approach things, I leaned in, I was interested. Being a business owner, I wanted to get a better idea of, hey, how's this guy really going to help me short term, just not long term, for my retirement?
Sure.
To be able to do that.
Yeah. And actually, in the big picture, we look at things holistically. We have some software that we have all of our clients survey through. It's a 15-minute fact-finding interview that enables us to find opportunities for tax savings. So that's the way we start our engagement. From there, we'll know about what we need to do for the rest of their investments, because if you start with taxes, you can work backwards and really enhance the whole experience by adding assets, and then you know how that money is to be invested, and also how to plan for tax savings going forward.
So specifically, the types of people for whom you'd like to do this work, like your ideal client?
Ideally, business owner, 45 to 70 years old. We can work in many phases of that owner's experience. And of course, they have to be profitable. They can't be losing money, obviously,
right.
Otherwise we're of no value. On the other side of that, we work with high net worth individuals who are looking for tax breaks. Even if they're W-2 employees, if they're making enough money to where they have tax issues and they're looking for things going forward, we can usually find something for them as well. But business owners primarily who we work with.
So is there any pain that they're feeling that says, I better call Roy, or?
Yeah, writing those big checks to Uncle Sam. That's the most painful thing. Yeah, that's usually how we get engaged. They've just gotten word from their CPA that they have to write a big quarterly check or
So for the audience's purposes, what's a big check look like to the IRS?
Anything over $25,000. Most of our cases are in the six figures.
Six figures?
Yeah,
Really?
Yeah. Usually the rebates that we find, it's an average of about $250,000.
Repeat that number for the audience.
$250,000 is our average case for clients.
So once people file their taxes and they realize, oh, I have to pay this, some of them try to go back and amend, right? Mm-hmm. To try to collect the money. So you're like an early stage idea versus a later stage
Exactly.
idea.
What we say is, typically a CPA has to deal with historical data. They're dealing with information that the client supplies to them, and they have to scramble to find tax deductions for that client. Now in all due respect, I empathize with CPAs because they have to deal with history. What we say to the client is, we're going to help you make history, not have to deal with history. And that is proper planning and being able to spend more money before taxes are incurred, as opposed to waiting till after a situation where you have to deal with trying to find ways to get a deduction.
I'm trying to put myself in the shoes of the CPA. You're making me look good.
Absolutely.
If I bring you into my client, you're going to make me look good, because you're going to find stuff
Absolutely.
that's sitting right in front of everybody that may have been missed. No fault of the CPA, but it may be there because you've done this so often. You see things that others may not.
Absolutely, and they are out of the box. I hate to use that trite expression, but they're out of the box thinking. CPAs have to deal with many clients. They're very busy, and they're generally too busy to do the types of strategies that we usually come up with. So we do all the back office work and give it to the CPA. CPAs love that, because if sometimes what we try to do is work with the CPA before we find the client, so that way the CPA can look good with his client. And in the world of commoditization between financial advisors and CPAs, we're all getting looked at with a microscope. And if you don't differentiate yourself, you're going to get replaced by somebody cheaper. So if we can provide value before that happens, we have a client for life.
So I'm imagining I'm a solopreneur CPA. I have a book of clients I'm working with. I don't want to lose them. By adding this kind of service to my mix, your company, I differentiate myself, and chances are I hold on to my clients longer. Did I read that right?
Absolutely. Absolutely. I'm part of a much larger group these specialists that I use in my back office, and we promote trying to work with CPAs from the beginning. What I'm looking for is a CPA or two to partner with, because the case I mentioned earlier, that CPA brought me around to all of his clients, and and he just became a hero with all his clients.
Let's pick up with that. We have to take a break. We have to hear words from our sponsors, but let's pick up when we come back at that particular point. So we're going to go to a break. We'll be back shortly with Roy, who's going to go a little bit more deeply into this approach, and it may be appropriate for you or someone you know. So we'll be back after the break. See you soon. You were talking about how you partner with CPAs and what that means to their clients. So pick up there and let's get back on track.
Yeah. As I mentioned in the first segment, we look for ways to find tax rebates or other federal incentives or even tax strategies for the typical client of ours, which is high net worth individuals and profitable businesses. So if we can connect with the CPA in advance, they have the numbers. So they have the data in order to find the tax savings. Generally, CPAs don't even think twice about, the information that they have at their fingertips and the amount of information that can benefit the client. So essentially, we're helping CPAs with their clients so that they don't become a commodity. Because of the world of computers and the way everything is automated, QuickBooks and things like that, CPAs need to find ways to differentiate themselves. And by finding these tax savings, they're putting money back into the pocket of the business owner. They look like a hero. There's no way you can put a price tag on that.
Well, in the first segment, you mentioned the HVAC business.
Yeah.
What was the number there that you guys were able to save them?
Roughly around $75,000 went back into the business.
I don't know what their margins were, but you have to sell a lot of stuff to end up with $75,000 worth of profit.
Absolutely.
Pre-tax.
Yeah, absolutely. And not only that, it comes back fairly quickly. It's not a long, drawn-out process as long as we get the data. We get the data, we go to work, it happens fairly quickly.
So you're part of a larger organization across the country?
Yes. I'm part of Elite Resource Group, which is essentially they teach us how to find these opportunities, and they teach us how to work with CPAs and how to find CPAs to work with that helps us put this all together. They also provide a back office of all of the resources and specialists to find these tax savings.
And they've been doing this for about how?
Probably around 10 years.
So they have
Yeah,
amassed
they
a
have
huge
history.
amount of data
Absolutely.
that you can benchmark various businesses against.
Absolutely.
Okay.
And also for CPAs. I mean, they really teach CPAs how to exponentially increase the revenue per client. And the clients love them for it. So they're making more money from their clients, and they're putting more money into their own pocket and evening out their cash flow. So they're not chasing people for tax returns to do that rote work. They have clients generally on a retained basis, and everybody wins.
So by offering more services, that CPA is getting more in return. If I were had a group of your clients here with us, and I said to them, hey, what's Roy do for you? What's the bottom line of all this? We're talking about money, et cetera, but I'm sure there's other benefits of doing business with you.
You know, I am a fiduciary. So, we have to do tax planning as part of that fiduciary responsibility. So that ties into everything. And we look at the big picture with our clients, all about their financial life as well as their personal life. So whatever is important to them really comes first when it comes to their money. We're always looking to minimize the amount of taxes that clients pay. Now, when you get into retirement, that can be a huge item. And if we can reduce the amount of taxable income in retirement, it's all about how much you put in your pocket. So that's what they'll tell you about me.
Talk a little bit about this value proposition that we're just mentioning. How do you communicate that to your clients? I know you hand them a check at some point,
Yeah.
Really, right?
Well, generally what we do is we try to find business owners who are, have issues with taxes. That comes after a tax return or a quarterly tax payment or, some experience where they had to write a big check to Uncle Sam. It's up-and-coming companies who are smart enough to engage us so that we can plan for them going forward. That is very prudent thinking for a business owner, because we can avoid a lot of things before they actually happen.
As a business owner, you had a printing business, I think you said, right?
Yes.
Had you had these kind of strategies 20 years ago when you were in the printing business, what would it have done to the value of your business at the end?
Absolutely. When you want to sell a business, you want to raise the value of the asset. So this would have put additional cash flow into the business. We had a 25,000 square foot building. We would have been a perfect candidate for cost segregation. That never happened while we owned the building. In fact, cost segregation came out right at that time. So we would have benefited from that, a serious benefit, because that was over $1 million building.
So this, in a way, what you're doing today is tied to somebody's exit strategy, in a way.
Absolutely. In fact, we have a specific exit strategy for highly profitable business owners that will also boost their retirement income and create a tax-free revenue stream for them, and also enable them to take a tax deduction for money that's going in. So a small cash flow can provide a huge exit strategy and also help them to sell the business, because they'll have something that's really worthwhile and they'll have something that makes it easy for them to transition for the new owner.
So by pivoting a couple of years ago into doing this, you got yourself on a pretty nice path now. You're really benefiting people. You're doing well, I assume. So where do you see this going?
Eventually, I guess I'd like to hire other advisors, junior advisors, to do what I do, teach them how to service business owners and enable them to essentially do reconnaissance and find these opportunities for business owners, just in general conversation.
In the Delaware Valley, southeastern Pennsylvania, South Jersey, how many people have this approach?
I'm the only one that uses this approach, as far as I know. I mean, there probably are CPAs who say they do this, and I'm sure they do a good job. I'm not trying to defame any CPA, but we lend a whole different paradigm to this thinking for both the CPA and the business owner and the financial advisor. The whole client's whole financial life is accounted for by using this approach.
And my sense is there's not a lot of risk involved here for the owner.
No, because our first experience, again, is handing them a check. So, even if there's a fee, they're going to come out so far ahead that the fee is nominal compared to what they receive. And it's a good way to get to know us. We take things in baby steps so we can start with whatever monies that we get for them in a rebate.
Listen, the show has to come to an end, but I promised at the beginning of the show that people would get a tremendous insight into this approach. I want to thank you for coming on the show. Now, every week, I offer my guests an opportunity to look into the camera and make an offer to the audience or give them additional information that you haven't shared yet. So, if you look in the camera, time's yours.
Okay. Well, if you're a profitable business owner and you think that you're paying too much in taxes, you can go to talktoroy.com and actually schedule a meeting online. It's a free consultation. We can come up with a list of opportunities for you, and you can decide. Doesn't cost you a thing. If you're a CPA, I'd like to talk to you. If you're a solopreneur especially, we can enhance your practice and change your life. You can't put a price tag on becoming a hero to your client because those clients never leave.
A CPA as a hero, that's an interesting concept. You can make it happen. Roy, I want to thank you for coming on the show.
Thanks for having me.
I want you to have continued good luck. And
Thank
any
you.
of you business owners out there, it might be well worth your time to at least have a conversation with Roy to find out if what he's doing may be helpful to you. Now, I will see you next week right here on RVN TV and What's Your Story. I'll have a guest, again, like Roy, who's authentic, genuine, who's going to share information that's insightful and practical that you can put to use in your business. So until then, be well. Great.